Hello, everyone, and thank you for joining us today. My name is Danielle Fisher, and I'm the event manager here at Eco Canada. And today's session is called Insuring the Future, Navigating Insurance Solutions for Renewable Energy and Climate Challenges. Before we start, I would like to take a moment to recognize the traditional Indigenous lands where Eco Canada's office is based in Calgary. At Eco Canada, we're committed to working towards respectful acknowledgement, collaboration, and reconciliation with Indigenous peoples across Canada. This starts with acknowledging our honor and privilege to live and work within the Treaty 7 territory. Today, we're presenting from the city of Calgary, home to the Métis Nation of Alberta, Districts 5 and 6. We would also like to take this time to acknowledge traditional territories and oral practices of the Niitsitapi, home of the Blackfoot Confederacy, which includes the Siksika, the Piikani, and the Kainai First Nations, and the Tsuut'ina and Goodstoney, which include Chiniki, Bearspaw, and Wesley First Nations. Before we start, there are a few housekeeping guidelines for today's session to ensure that everyone can enjoy and participate in our session effectively. All participants are muted, so please check your audio settings to ensure that you can hear us properly. If you're experiencing any technical issues, please use the question box and select Eco Canada, the organizer, and I'll do all that I can to resolve the issue. Today's webinar is being recorded and will be made available on demand to you within the next 24 hours. Everyone who registered for the webinar will receive an email with a link to the video. Any questions that you have about the presentation or today's topic can be submitted through the chat box or question box. We will have dedicated time during the presentation to answer any questions from the audience. Finally, we really want to know what you think about our webinars and how we can keep improving. You'll be sent a short survey after the webinar ends. Please let us know what you think or if you have any comments or suggestions about the webinar. Eco Canada's vision is to build the world's leading environmental workforce. Eco Canada seeks to help environmental workers succeed at each step of their career journey. To do this, Eco Canada has developed programs tailored to individuals at different stages of their career. For those looking to enter the environmental workforce, Eco Canada provides training through the BEAR program and accreditation for environmental programs at post-secondary institutions. Excuse me. Eco Canada also provides opportunities for new workers to break into the environmental sector through wage funding for co-op students and recent post-secondary graduates. For those already employed as environmental workers, Eco Canada provides the environmental professional and environmental professional in training certifications and EPT students. Lastly, Eco Canada provides opportunities for those with vast experience as environmental workers to provide guidance and direction to Eco Canada's products and programs through advisory committees and emeritus memberships. Now I'd like to introduce you to our speaker. Please welcome Martin Delaney. Martin is the Senior VP and National Practice Leader of Sustainable Transactions at Gallagher. He's based in Calgary, and he and his team assist the energy, power, construction, and manufacturing clients to protect their balance sheet on their journey to net zero. Welcome, Martin.
Well, thank you very much. Thrilled to be here and given the opportunity to talk about how insurance and insurance products will help lenders, project managers, OEMs, construction, subcontractors, whoever is involved in renewables and in anything to do with a company's journey to a low carbon economy. So what I'd like to do today is give everyone a high level view of the practice that is national in scope and global in reach, and where we can help. So I'll give you a little bit of background on me to set the table, as it were. I come from an ERM, enterprise risk management background, so I like to look at things holistically from a comprehensive sort of point of view. And my background is banking. I moved into transactional insurance, and transactional insurance can be defined as as any product that helps a company, a client, move their project to FID, final investment decision, and protects the balance sheet, with these projects or in general, with a number of different products. And this ties nicely and aligns to the other insurances that are required on the operational side and the offtake side. So I work on nationally, locally, and globally to see trends and how insurance companies are very keen on developing new and adapting their existing products to help everyone on this energy transition journey. So we'll go to the next slide, and it'll really just give you an opportunity to see some of the products that we work with in sustainable transactions and how we support our colleagues and clients and prospects. I'm going to touch a little bit today on the overall practice and then focus in the last few slides on renewables. So an area of great interest in Western Canada, of course, is carbon capture, utilization, storage, and insurance wraps. That can be with CCUS, CCS, or direct air capture. I'll talk a little bit about technology performance, insurance, and then very important to this discussion, credit line and credit project financing covers. And then I'll talk a little bit about carbon credit invalidation insurance, which is fairly new, but we are seeing traction, and I think that may stir a lot of questions along the way. Energy efficiency insurances, which is another important tool in your toolbox when you're looking at making those investments and wanting to see efficiencies in your energy footprint or carbon footprint. I'd like to talk a little bit about incentive tax credits as well and how insurance products can protect them. And then we'll spend the last little bit on renewable energy insurance solutions, talk about market overview, design phase, construction phase, and then operations. So quite comprehensive. I'm sure I'm hoping there'll be some questions afterwards, but so let's start with the next slide, which is the carbon capture utilization. So I look at this as, there's not one single product out there that can be used around carbon capture projects. The first one I'd like to talk about is the technology performance insurance. So that cover provides revenue protection in case of technology performance issues during the startup and long-term performance. That's quite important from a contract perspective, from a positive revenue perspective, of course. And the coverage looks at engineering, manufacturing, the construction, and operation of that CCUS, CCS, or DAC project. Again, part of that wrap, and we'll go into these products a little bit deeper as we go. The emission credit invalidation insurance, which protects the future value of any credits. And now many of those, CFR credits, carbon credits are stackable. So it protects them, in the policy around stated triggers. And those triggers can be fraud, negligence, serialization impairment, any kind of regulatory change, and leakage from reservoir, those types of coverages. Again, another important consideration is the environmental site liability. So that pollution liability coverage for first and third party protection for these bespoke risks respond to a gradual pollution exposure. And then we have to think about, especially with renewables and CCUS, late life asset decommissioning insurances. The moratorium here in Alberta was based on this consideration around abandonment, how how that's going to work. So we look at things like decommissioning bonds, reclamation bonds to cover those end-of-life exposures. Next slide, please. So a little bit deeper dive on the technology performance. The coverage, as I mentioned, is revenue protection in case of technology operations issues in that startup and long-term performance. The insurance is triggered by possibly, it can be an incorrect design in engineering, plant operations, the result lower than intended feedstock conversion. It'll cover the delta in that conversion process, product yield, plant uptime as well. If there's increased maintenance or off-spec product, reduced product output, the insurance will cover those exposures after their, of course, underwriting and due diligence phase. The insurance, covers investors, lenders, repayment obligations, operating costs, fixed costs of the facilities, pays for necessary repairs, modifications, replacement of process equipment. You can see it's very comprehensive. There's only a limited number of markets out there that can cover this kind of comprehensive new technology coverage. So it's an invaluable tool for projects, for holding companies, the projects themselves, from investors' perspective, to cover those very real financial gaps and exposures in a project. So an important consideration at the beginning of the process here. You'll see on the next slide, we'll go a little bit deeper into the credit line and project financing cover, which is important at the front end of the project and at the back end of the project as well. So this provides security to take the necessary steps to transition and help support growth and development of renewable projects. And they can include trade credit insurance, and trade credit is very important. It protects your accounts receivable. So it gives you more liquidity. It protects your balance sheet. The banks are very interested in this kind of protection. They can lend more, offer better rates when they know that the receivables of their clients are insured. And then I'll just skip down to trade finance, very similar. The structured surety solution for offtake agreements. Structured surety replaces letters of credit. So it takes that obligation off balance sheet, again, offering more liquidity, more capital access. And it is a new sort of branch of traditional surety where you have contract and commercial and acts as a demand instrument. So again, very, very helpful when you're looking at the offtake portion or setting up precedent agreements. And then very bespoke project financing. There's lots of tools out there that can assist. That could include credit default swaps, where the off-taker may not be investment grade. So improving, the ensuring price stability over 5 years. Over 5 years, tranches can go out 15, 20 years. But a handy tool for project developers. These products ultimately free up limited capital resources to support significant increases with investment for developing renewable resources, as I said, on our journey. On the next slide, we'll dive a little bit deeper into the carbon credit invalidation insurance. So again, using insurance products, we can backstop the value of, as I said, OBPS, tier credits, whatever credits across the country against an invalidation of that credit down the road. So, obviously, a very important consideration on anyone's sort of on renewables, on CCUS, on any type of this project to ensure that the underlying project entity, whoever is the owner of that, if you sell those credit onward, the insurance follows that credit. So as I said, it covers such stated triggers as fraud, regulatory deficiencies, negligence, errors in the data that overstates project reductions, serialization impairments, duplication, lost leakage, non-delivery, and then also non-payment. So there are lots of different, again, this is an emerging insurance cover. This is not only for the voluntary carbon market, but it's also for compliance markets that we find in Canada. On the next slide, we're going to talk about energy efficiency insurances. So as you can appreciate, the insurance markets are paying huge cat disaster payments every year. That number continues to increase. You can see in Florida and through the southeast, whether it was Milton or any other number of hurricanes, tremendous damage, drought, flooding. And so it's really, insurance markets are very, very keen on developing products, new products, and adapting existing products to help their clients and to build a virtuous cycle up front where the premiums that go into these green insurance products pay for green funds, and they want to address these issues up front. And one of those products, and this can come in a couple of different versions, is really energy efficiency insurance. So it offers contingent covers, business interruption, protecting against loss of revenue that would otherwise have been generated by energy saving projects caused as a result of equipment failure or damage. So asset performance insurance covers any shortfalls in any anticipated annual energy savings as a result of these deficiencies. So companies who are making the effort to bring in new equipment, trying to reduce their carbon footprint, there are insurance products that can help you cover any of those shortfalls. And I think when you're considering those types of projects on a small or large scale, it's good to understand that these products exist. So, green energy project insurance, supporting renewables and construction and operational risk on the next slide. We talk about helping our renewable partners or oil and gas participants who are looking for risk protection in the energy transition. And this is where these projects, which we will get into a little bit deeper on for renewables, see products support critical development, providing coverage with the following, with wind and solar. And this will be across construction and the operational phases of the project. And as I said, we're going to go into this a bit deeper in the coming slides. But I think that you have to think of the design, the construction, and the operational phase, and think about how these insurance products can help you early on when you're looking for capital, when you're building, getting to FID. I think it's important to bring the insurance markets into that conversation as soon as possible, because the whole landscape around insurance products is changing, and it behooves us to consider that conversation, their expertise around wind, solar, as I said, every aspect of the energy transition. The insurance markets are investing time, resources into building strong products that help us through cover those risks. And I've been in this business for a long time, and certainly there is risk considerations across the board. So again, this is a plea that if you're thinking about this project or any type of, on this renewable or whatever journey you're on, to engage your insurance broker early on in the conversation to ensure that the appropriate markets are called, to the table as we work together. So I'd like to talk a little bit on the next slide about the incentive tax credits that were announced in C59, Bill C59. So across North America, whether it's the 45Q with the Inflation Reduction Act in the US, and we'll see where that goes into 2025. But these incentive tax credits, whether they be for CCUS, ITCs, or clean tech, ICTs, or renewables, they're an important consideration as well as you stack credits and insure. So Gallagher has a standalone facility for 45Q and V, which covers hydrogen, and in Canada as well with the ITCs as they roll out. So we can provide upwards to 750 million USD in capital for deployment on deals in the US and Canada. So we insure the tax equity investor, insurance that significantly supports the value of 45Q, and the ITCs are pending, but we do have insurance markets that are looking at the ITCs and are willing to support them as well. Covers recapture of lost credits on a clawback or a disallowance of credits after the project is in service. They are transferable and they pay direct. So again, ITCs are an important consideration in the project financial viability and profitability of these projects at times. So there are tools that we see. And ITCs and insurance coverage around tax is not new. We see a lot of tools around M&A activity in the energy space or any space where reps and warranties are made by the seller and around tax opinions as well. And these tax opinions and exposures can be covered by insurance products. And that's important because you get to, often monies are held in escrow, and that helps the seller get to that cash quicker because the reps and warranties are insured and the tax implications are insured as well. So ITCs, a new sort of application of tax insurance. So let's look at, on a broader scale, renewables and renewable insurance. You may be well aware that almost 30% of the world's electrical grid is generated by renewables. This growth is, the projection is growing. The International Energy Agency states that renewables will grow to 45% of that pie by 2030, which is just around the corner. And then all this growth will require financial and transactional construction insurance products to protect against the increased risk associated with climate change and severe weather. So the International Renewable Energy Agencies have stated that investment will reach a record high of $578 billion to get to that 45%. That has fallen short recently, and another $1 trillion USD will be needed investing in renewables to meet those 2030 targets. And so if we look at what's happening in Texas, which is often the canary in the coal mine, they are looking at a diverse energy portfolio that includes renewables and direct air capture and other sort of projects. So whatever happens in the US, whatever happens in Canada politically, the role and requirement for renewables and companies to move on this low carbon journey is still strong, and investments will have to be made. Our current underwriting cycle shows that market capacity is there. So capacity does exist. Products do exist to help you on the journey. And markets can rate, follow, and offer reasonable terms. So we can expect a continuing soft market. So when we talk about a soft market, we're talking about where prices for insurance products are reasonable because capacity is there, demand is there, but capacity is there as well. So I'm trying to sort of paint that picture for the larger conversation that we're going to have. So I can speak for Gallagher on the renewable side. So our project locations span the globe, certainly Canada, North America, Europe, South America, as well in Asia. And we can support project size from 1 megawatt to 800 megawatt projects. That's not an issue. And the interest insured would run from developers, owners, contractors, subcontractors, operators, as well as lenders and investors, of course. So we assist our clients in addressing their unique financial risks. That would include, as I talked about, tax grant recapture, incentive recaptures around repayment protection, replacement, extra expense. That's always a consideration, is replacement power and increased costs, those contingent exposures, and certainly protection and assistance around PPAs, virtual PPAs, and that was, I referred to that earlier slide around structured surety or credit default swaps. Again, helping clients and off-takers ensure their revenue streams down the road. So let's look at the comprehensive protections and solutions on the concept design level. So as I said earlier, the sooner that you can bring the insurance markets into the conversation, they have the engineers, they have the experience, they have the awareness, they do on-site, they've been in this business for years. It's important to get them engaged early in the conversation. The contractual and corporate structure review is important around lender requirements, lease arrangements, and EPC tender documents. Again, serialization impairments, regulatory change covers, all that needs to be really considered in the design phase. And then they can also assist on site design, layout of the project. They offer technical advice on site design, ensuring that we meet the insurer's risk profiles are reviewed, and competitive premium spent. So in that early stage, we can really find the appropriate market as your broker to bring the right market in. So this due diligence phase, we have to look at supply chain considerations, review of key partners in your supply chain, certainly looking at timelines, and this information's are really important, are key to underwriting that initial project phase, and to ensure that the project is profitable, meets all the contract requirements. We've looked at the PPAs, we've looked at the contracts, and that we can get to FID with confidence as we enter the next phase, which is on the next slide. So the construction phase. Project owners must decide whether to insure the projects themselves or rely on the EPC's contractors insurance program. There's considerations, maybe some of it will be covered. Again, we ensure with our markets that these exposures are covered and that you're not left hanging. This decision will be influenced by the lender's insurance requirements and often their lenders' financial covenants. The contract review is necessary to make sure that during this construction phase that all those exposures and risks are covered. Loss controls are consideration. It's paramount that the final site design is reviewed by the broker and the markets. Insurance programs must meet the requirements of the facilities agreements. And again, that due process, that consideration is something that the market's vast experience and consultancy can offer you as you go from design to construction. And then, of course, again, there's this constant review, not only of the contracts, but contractor insurance, their limits, their exposures, and again, all looked at through the lens of your project timelines. So this construction phase is, again, another crucial part of the overall project life. So let's talk about ongoing operations. So again, as I mentioned, this is an ongoing review. It's not like a policy you put on a shelf and you look at it every year. It is looked at consistently over the life and the operational side. Project owner must decide whether to insure the project themselves, as I said, or go back to the EPC's contract, review of loss controls, continual contract review, and the offtake agreements that we talked about earlier. That sort of forms the formal part of my presentation. We covered a lot of ground. I would just like to reiterate again that it is crucial to get the right players at the table as you start your due diligence and consideration. This sustainable practice likes to offer our clients a full sort of toolbox of tools and experience through this process and through all the different phases. Oftentimes, a lot of brokers will only sort of look at the construction side of things, but I think we have to come at this holistically from an enterprise-wide view. Now, any one of these products that I talked about at the top could be a webinar on its own, but I really just wanted to give everyone a feel of what is out there, what is happening, the conversations that are going on the insurance side. I've been to many a conference, whether it be renewables, whether it be on carbon trading, whether it's on climate change, and inevitably somebody is up there and they have a single bullet point that says insurance. Myself as an insurance broker will go up to them and ask them, how does insurance play that role? There is risk associated with all these projects, and they sort of go, it's almost a throwaway. So I just want to assure everyone that the insurance community is looking at this seriously, but I would also stress that this can't be, it's not something that's done, you've got to work with somebody who's in this business day in and day out. I think it is such a unique class of business and risk that, and it's moving daily, whether it's the regulatory space, whether it's a policy space, whether whatever technology exposures, that you really need to work with a broker and an insurance market that's in this every single day, and get them engaged at an early part of your considerations. That's a lot of information. There may be some questions around some of the topics we've talked about, and certainly be happy to do my best in answering those questions.
Thank you so much, Martin. That was very interesting, and it sounds like it would really behoove anyone on this call to engage with those insurance agents from the beginning of your project to make sure that everything's covered. So we do have a few questions. The first one is about rapid development of technologies. And the question is, With the rapid development of technologies like floating solar panels or offshore wind,
Sure.
how is the
Yep.
insurance industry adapting to cover these emerging innovations? And are there gaps in coverage that need to be addressed?
Great question. I mean, there's always exposures and gaps in any project and any consideration at the beginning. But I can tell you, while there's only a handful of insurance markets, they're usually global players who have the experience. They've got the engineers working with them locally, globally. They can look at their global book and see offshore wind, uh, 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 any number of new technologies. They're exposed to that. They see it probably before anyone else. So the good news is that a dialogue between project owners and your broker and insurance markets will ensure that the right market is engaged at the beginning. So yes, while technology is evolving all the time, uh, the markets are moving quickly to adapt and deal with it. Uh, as I said, I don't want to, I'll repeat myself in the sense that insurance markets are really making an effort to invest at every level to meet the demands of the new technologies, locations, and the exposures because of climate change and the new technologies that are coming online, whether they be on renewables. We can look at geothermal, biomass, carbon capture, all these different technologies. They're out there, and we do have the appropriate coverages. And also, not only in the development stage, but on the operational stage too, as well as the contingent covers that align nicely with technology performance.
So it sounds like there's a real concerted effort to kind of get ahead of the curve there by that industry. So that's amazing.
Yep,
Um,
absolutely.
So, how has the increasing frequency of and severity of climate related events impacted insurance premiums for renewable energy projects? And what kind of trends do you foresee in the near future?
Yeah, excellent. I think, it really depends on the type of exposure that we're talking about. As I mentioned earlier, because markets are making these investments, we're still looking at a soft market, which means very competitive pricing around that. It will depend as the technology increases blade size, turbine size, as it were, the lifespan of that, recycling. We're no longer seeing where blades are buried. We the stress that is put on this new technology, blade size, as I mentioned, uh, we are adapting as we go. So the markets are adapting and they're anticipating this kind of exposure. Uh, that's on the renewable side, certainly. If you're talking about flood insurance, that is getting more and more difficult to find. Markets are pulling out of that. There's only so much capacity or reinsurance that can happen in that space. Of course, you don't want to overexpose, but thankfully, a lot of markets to choose from, depending on the technology and depending on the location. So for now, renewables can enjoy uh, softer rates, soft market, and again, will adapt with that technology, with the size of the project as well.
Sounds like a work in progress, but an important one. So it's very interesting. And we have one last question, and it is about renewable energy. As renewable
Yeah.
energy projects scale up, what are the most significant risks that insurers are focusing on for these renewable projects? And how can companies in that sector better manage these risks so that maybe they don't have to get insurance?
Uh, well, there's certainly, there's risk mitigation. You can take certain risks on. You can transfer those risks through insurance products. There's risk mitigation strategies. Again, there's a number of different tools that you can use as you know, during the design, construction, and operational phase. The Because of the sort of uncertainty that we're facing in the regulatory environment, driven by the policymakers, uh, the increased exposure because of climate change, it's you know it's moving, it's moving underneath our feet. Things are not staying still. So I mean, I think you need to work again with the right consultancy, have the right experience, the right site engineers to be able to say, I can take that risk on, or this is something I need to transfer, or where it makes sense. Again, I look at things holistically. I look at the financial considerations that get the project off the ground, and then the ongoing and offtake piece. I hope I've answered the question, but it, it's it, it's so dynamic, and a lot of these policies are not off the shelf. They're very bespoke, tailored, as it were. But the expertise is there to assist you as you go along. Uh, yeah, I keep hearing, you know, we're building this plane as we fly it. So it is. Such a transitional industry, and I think you just have to be, buyer beware.
Absolutely. Well, I think that this was fascinating. So I just wanted to remind everyone that this webinar will be sent out to you within the next 24 hours. You can reach out to me at events@eco.ca if you have any questions for Martin. I'll make sure to pass those on to him. Thank you so much, Martin. This was a
Yeah,
very fascinating webinar, and I think that anyone that's on this call, if they're not running out the door to go and talk to their insurance broker, then they might be in a little bit of a struggle later on. So I think that it's super beneficial, and it sounds like your industry is working side by side when it comes to renewables to get those off the ground. So thank you so
right.
much for your
Absolutely.
expertise. Any last words?
Yeah, no, thank you very much for the opportunity to talk about this evolving, practice, insurance practice. And again, I would just caution people to make sure that whether uh, you're a member of, let's say, CanRIA, sit on their insurance panel, just you know, get the right person at the table, the right markets, and you will save time and money and get to where you want to be faster and safer. So I guess those are the last words that I have to offer.
Wonderful. Thank you so much, Martin. Thanks for everyone
Thank
on this call. Have a wonderful
thank
day.
you very
Bye.
much. Take care.